So anyway, about me, I think most they knows me well in this community. I'm a little bit community activist, been everywhere until I hit with the family issue and finance, and then most focus on those. Before that, I was more active in the community. I've been accountant over, don't count on my age, 35 years since I graduated from college. So I practiced over there in my country. When I came here also, almost 28 years ago, I started practice accounting also, work in a big corporation, and then I moved to Tracy, and I commuting to Sun Microsystem decided to stop because God blessed me with the third child after 17, 18 years. So don't even count on grandma, okay? Still I have a 16 years old. And then I decided to open my own office. I started with a small room. Thanks God I grow, and now I'm a little bit proud of my business, and still keep moving on and looking forward for retirement. Couple more years. But anyway, today our subject is going to be all the deduction for the real estate agent, and I have a few. And before the market crashed, I had a lot of the real estates with the 1099 over 300,000, 400,000, 500,000, and it was really hard to get all those deductions. So, but then after that, I moved to the little bit shift to the other area, and most my clients right now is foreigner, which they're living here and they're working over there. But I decided to go back to the real estate because sound like a market, housing market is going up, so that means the real estate agent's going to be more active, and I can hit the market and get a few more clients from there. Any area you feel like I'm gonna speak Farsi, please let me know that Jonathan can help me because when I have the presentation, sometimes I have to think and translate it and make sure my words is get across and everybody just understand that terminology. Any question? I cannot get that one. Thank you. First of all, I just want to notify you, we have the folder, and anytime I go forward, I might ask you to pull the document from your folder that you can see the actual document, what we're talking about. And also a little bit of pen and paper if you need to take a note or anything in there for your future reference. So we're going to start it with the licensed real estate agent, real estate tax tip. So as of you know, most of the real estate professionals operated their business as a sole proprietorship. So this means that you are not someone's employee, you haven't formed a partnership with anybody, and you have not incorporated your business. You're completely independent agent. Licensed real estate are statutory non-employees and are treated as a self-employed for all the federal tax purposes, including income and employment taxes. I don't know, I should just go through, read for you, or just talk to you face to face based off my experience and crosswords. So that means that all the real estate are on 1099. And when they're on 1099, that means they have to pay their self-employed taxes. Only chance they have to deduct all the expenses. But the expenses that IRS makes sure accept them. The reason I'm saying that because right now I have two real estate present them to IRS for the audit. And then one of them is very critical, probably around the 18,000, something like that, they have to pay because of the mileage and depreciation of the car, they claimed it. Yes?
Can I share with you that the agents, most of their checks are cut through the title company, and so they are self-employed. at the end of the year, they have to do their own tax. Now, we turn
That's
in
right.
the amount that they've made, but we don't file it with the IRS.
No.
It's up to each individual to do it because
Each-
they are independent contractors.
Each individual act like the contractor and they're all 1099, and they have to. We're gonna go ahead. I think I'm gonna escape this and just to talk to you about that. That yeah, they're all have to claim 1099 on a Schedule C. That's why they have this chance, this opportunity to deduct all the expenses, but they have to be very make sure about that. So, and I'm talking about my experience because I have right now one that, of course, they're paying me to present it for the auditing, and that's the real estate agent. The service are performing under the written contract and provided that will not be treated as an employee for the federal tax purposes as of the June 6th. This category included in the individual engaged in the appraisal activities for real estate sales if they earn income on a sales or other output. That will be also appraisals or those type of jobs. Also, they're including of the real estate agent category. Most real estate professionals get reported their income as a non-composition on a 1099 miscellaneous. It's the real estate agent responsibility to report their income on the 1099 miscellaneous to IRS on the form of the absolutely 1040 Schedule C profit and loss for the businesses. And now it's a time of the year when you wanted to find a way to keep as much money in your pocket. As a real estate agent, tax time comes with many of opportunity to save, but only if you know which deduction to take. There are some tax deduction every agent should look for them when they file their taxes. These are what we're going through. That absolutely, that's all the deduction that real estate eligible to take. Most of them they're new, most of them they're not. And the most I can see based off the preparation for real estate, not just for real estate, for anybody who's on self-employed 1099, they're not really claiming with this new technology is the internet advertising. And right now it's growing. It's growing and growing and growing. That means when you purchase the iPad, iPhone for your business, or all the cellular phone equipment, all the new technology, all advertising on a Google or website or anything, they're all deductible, especially for the real estate agent, because that's the way they promote themselves through, at this point, social networking. So remember to get the whole point is when you are on the internet advertising, sometimes you're not getting receipts, or you don't even pay attention to send you an email, and that's they ask you to this is your receipt. Mine, I'm not doing it. Gosh, but you have to print it. You have to have a document that what's the reason you paid for this, and that's a very, very important and called the order confirmation, and usually they're sending it through the email to you. Tip. It was interesting for me because I really didn't know about that, and when I was preparing and researching to put this PowerPoint presentation together, I found this myself, and it says that creative call vendor bills on your computer or in your email box, create it and then use it, save it to your online purchase receipt. So I tried to do that and find out how I'm going to be able, but then I found out that if my computer crashed, what I'm going to do if I don't have a hard copy. So that's why it's, you need to be very careful to have the hard copy also, because with this new technology, this computer crashed. Now I'm just using it for PowerPoint because I cannot do anything with it, but it's a lot of document there. So this is the one area, and then the other area that right now is very important, and I need you on your folder, take a look at the two forms I presented to you. That's the mileage log. 2 weeks ago when I did take my client, the one area the auditors just pointed that he did not have a mileage log. And they say, if you can present a mileage log to me, I'll accept all your mileage. So, and then in this area, as of you know, is the actual or standard. If you want to take a, usually I would like to take a actual, not a standard, because then it comes, if you'll take it as a standard, that means it's the mileage. And if that's a mileage, then you have to have a document. How are you going to have a document? So best things is your mileage log, or they do it, take a look at it. I'm sharing this with you because this is very sensitive area. When I said that this person as a real estate has a 10,000 mileage and then asked me about the repair and then changed the oil, I said, no, the meter says this, and now the last one meter says this. So that means approximately is just a 4,000 mileage. How in this world you came up with the 10,000? So they're looking at all those documents that we don't even take a look at it, because when you're changing your oil, they're putting your mileage. And anytime they're putting the mileage, that's the one they're counting on it. But if you have also mileage log, that's very helpful. That's the area of the mileage log, which Iris, take a look at it, or your gas receipt. For instance, I said, yes.
I'm sorry, I hate to interrupt you mid-sentence. You used the word standard, so is there a standard number of miles that a real estate agent uses in it? No, what did you mean by standard?
Okay, when we prepare, as a tax preparation, it's the two methods we have to use it.
Standard.
One is the standard, one is the actual.
Got it.
If that's the actual, it's gas, depreciation, repair, maintenance, tire change.
Itemized versus...
There,
Gotcha. Okay, I'm following you.
it's, you call it automized, but we call the automized on a Schedule A.
Okay.
As the mortgage interest, those type of stuff. So that's why they call it actual and standard. But if you don't really want it, you can use the mileage, which is called the standard, and it's the 55 cents. So we can take it. But mileage, I just came to that cross based of my experience. It's more dangerous than the actual.
For getting audited? You mean?
For getting audited, yeah. Because you cannot prove it. Except right now they're hitting and they're just nailing to have the mileage log. So, but it's the actual, so your car is there.
Yeah.
So you can prove your gas. Usually the gas you can use it is on your credit card. It's not something that cash or whatever, or you can save it. And then repair, maintenance, depreciation of your
Tires,
car.
brakes, all that.
Tire, brakes, everything. So to me, actual is a little bit much more safer than mileage.
Got it.
Tip, it's also a good idea to write down the related client's name on your receipt, or so you can where the expenses comes from. The other area that you have to pay attention, and it's definitely that tax deductible, is the parking fee and the tolls. So just to save all the parking receipt and anywhere you go, and especially if you're working in a city. Here we don't have it that much parking fee, but if you go city, it's always parking fee involved. This part is very important, and I'm sure that most of you know is the treating your clients. But I had a client, which I told you, agent client, they claim about the $10,000 gift to the client. That's true. You have to, in order to have a high income, you have to treat your clients. But it's up to you. IRS is not taking more than $25 for each client. He used to go to the Nordstrom, purchase the 200. I said, you can't. It's up to you. You can go and purchase the $1,000 gift, but IRS is not taking more than $25. So if you're treating your client to go for lunch and everything, so make sure you're talking about the work, not about the what happened last night. My grandbaby didn't let me to sleep. Oh gosh, so that's the very important. Well, this is something that is principle. I know that IRS auditor, they don't know that what you're talking. Absolutely, we talk about the business, but also make sure that you're keeping the receipts and you have all the receipts in place. One time when I took the client for the auditing, they asked about the business card, and they says, well, when did you take your when you did take your client to the lunch or dinner or whatever, or buy the purchase sporting giant ticket or anything to give it to them, what client do you have the business card? So after that I got habit to collect the business cards, and I have this much of this business cards. So if you can just write the back of your client's business card, if they are in a business or whatever, that's the good evidence for the IRS. So, and the meals and entertainment can be either 50% or 100% deductible, depend of what type of the event or what type of the business you do. So, have a backup the documents such as the receipt or invoices to ensure that the IRS will allow the deduction. The best possible document including expense amount, reason of the expense, data and time of the expense, and name of the people you were with your, that's why I told you about the business card, and the receipt of the invoice. So these are the best way to keep that. Before that, it was the shoebox. We ask our client just get the shoebox and put all the receipt. Now it's the Ziploc. Now it's with the new technology, it's just to open the file or anything and just make a PDF and put it there. So based off the other area is absolutely, that's the office supplies, cell phone, licenses, continuation of the education, seminar, meeting, and everything. So, for instance, if Ms. Jean Bowen here have the meeting every Tuesday and provided water, that's tax deductible. You can deduct that. Anything that's related to that. So, computer, electronic, these days, absolutely is the iPad, iPhone, all the new equipment, so new technology is there are the big one, office supplies, absolutely you have to just make sure that keep the receipt. Any kind of real estate license, MLS, or anything you guys are paying for that, that's tax deductible. Newspaper, magazine subscription, membership, deductible if you guys are using for the business also. Postage, considering how many real estate agents still use the mass or other mailing, which I doubt it, because right now is the mass in the just to go there. Continuation of education related to real estate, any seminar or meeting, expenses to improve your job is the tax deductible. Tip, don't forget about the telephone bills. Most of the cell phone equipment, such as iPhone Galaxy, is the new one. Be sure that document how much you spend so you can write off the end of the year. Get the habit to taking picture. This is very interesting. When I was just researching and putting that, I said, who has a time to take a picture of their receipt and put it in the somewhere? But that's the really work. So if you can just do that, you can email them to yourself and use Expedensity to, it's a great free app. I haven't used it. I'm going to go back and use and see what that one is work or not, but that's the base of my research also. From here, it's getting a little bit interesting because that's very sensitive, and right now IRS is really nail on that part. It's the utility and home use for your business. Everybody says utility. How in this world I can deduct my utilities? Yes, you can deduct your utilities based off the home-based business. So most of the real estate agent, absolutely, they're using their home as to operate it or business. Not to operate it, call the clients, do the paperwork, and that type of stuff. So now we're getting to the what is the home office form 8829. Whether you're self-employed or your employee, you might be able to deduct a certain expenses for the part of your home you use it for business, such as utility, rent, mortgage interest, property tax, and insurance. Those are that you can deduct it. If you pull your Form 8829, this is that your tax preparation have to know and then prepare it for you. Anything here, that's the part of your home-based business, you can deduct it. But it depends. Depends of the deducted expenses for business for your home, and part of your home must be used regularly and exclusively. What does it mean, regularly and exclusively? I'm going to ignore that and tell you myself. So what is the regularly? That means that you cannot use your, first of all, let's get this one. You have a 3,000 square feet house, but you're just using it one area or one room, and that's the 300 square feet. So then this is the way they calculate it. Divide the 300 by the 3,000, 10%. 10% of all the expenses you're paying for your home is tax deductible. Anything, your rent, if you're renting, if you're paying the mortgage, if you're paying all the utilities, other expenses, or the fix the house, 10% you're eligible to deduct it. So, but you have to use it regularly. What does it mean? You cannot use it just 1 month of the 12 months. All 12 months, that area is your office and you're using it. That means you're in business for 12 months, not just a 1 month, so then, no, you're not eligible for that. And exclusively, that means if you're using that room or that corner for your office, you're not allowed to use it as the personal. That means, okay, this room, I have the cabinet, closet, I can put my clothes there. No, you cannot do it. Actually, Iris is not coming and see you, but you're the one you have to judge yourself.
I have
So,
known them to come and audit it at home. And
Thanks God, I
presently,
haven't got to
the
that
IRS
point.
actually knocked on the door, and said, we're here to talk about, so you can be audited. It's
Yeah, it
not
can
that
be
they-
audited,
It
so-
can be happen, and that, whether you go alphabetically, who knows?
yeah.
Just to scare everybody else, they audit me, I'm gonna tell you guys, you're gonna take your clothes out of your closet and get it somewhere else.
Yeah.
So I have known somebody that was audited.
That area, 100%, that's why I call it exclusively. 100% needs to be used for just a business. You cannot combine it with your, you don't have it room, let's go put my refrigerator that corner. No, you cannot do it. Nothing should not be there personal. Everything should be there related to your job or business matter. So, I think I explained this. If you want it, you have completely all of this. You can read it. To qualify under exclusively used test, you must use the specific area of the home only for the trade of the business. The area used for business can be a room, other separate identifiable space. The space does not need to be marked off by the permanent partitions. Also, you do not meet the requirement of the exclusively used test if you use the area in the question both for the business and personal purposes. Already I told you about the regular use, and already I told you about the trade of business, and that's why you have to operate it for your business. Additional test for the employee use. The employee that use a part of the home for business would be qualified for the deduction for the business use. The business use must be the convince of the employer. The reason I put that, because I had this one, might not be the related to real estate agents, but a lot of the clients I have, they're working in Bay Area or they're working here, they're working corporation, they're allowed to work from home. Yes, they're eligible to use the office for home business. So if they're working even outside, they have a W-2s, not the 1099. That one is not going to this form. That one is going to the Form 2106, Schedule A, as unreimbursed expenses. But still they're eligible to deduct in their home-based business. Home use for business. The area, yeah, that you might thinking that, well, how I'm gonna prove it that I'm using my home for the business. That's the area administrative and management activities. If you do the billing, customer, client, patient, keeping book and record, calling the ordering supplies, setting up appointment, forwarding order or writing report, or contacting the clients and everything, yes, you're eligible to use deducted. I think I just went through that. Do you have any question on all of this? I don't want to repeat it over and over. The way that figure of the deduction already I told you, if your house is 2,000 square feet and you're using the area 100 square feet or 200 square feet, so divided that 200 by the 2,000, you get the 10%, and then when they fill it out, these forms that give you 10% deduction of all the expenses you have. Utilities also could be including of the water, sewer, PG&E, gas, housekeeping, clean up the house, not landscaping. You cannot do the landscaping. So this is the how to deduct the home base. That's the form already you have. And then separate structure also, that's the way you calculate it. In case also you built some separate area, yes, you can deduct it. Use the garage also, yes, you can deduct it. This part I'm telling you might not be included, but some of you might have another business like a Mary Kay, some sort of those home-based business. Yes, if you're storing your inventory at home, yes, you're eligible to deduct it home-based business. That's the business percentage. That's the way you're getting the business percentage. And again, it tells you how to business percentage. They divided the area used for the business by the total area of your home, and the 10% you can get the way that you deduct it.
Can I ask a quick question? Do we have those papers too in our packet?
Yes. Yes.
The wording what you have there?
No.
Yeah,
I think no, I did not put the wording of the use the home base, but I think I put the wording of the little bit how deducted the area. Not the really
May I
home
ask you
base.
a question? Can I actually take a copy of that and print it for everybody and I'll put it on the?
Yes.
Okay, we'll do that for you.
Yeah.
Good point.
Yeah.
'Cause I like
That's
the
a good
verbiage.
point.
She's breaking it down to common
Yeah.
sense.
Yes.
And with real estate, I think every one of you have an office at home. So this is important, very, very important for you to know.
Right.
So,
Yes.
actually,
I'll do
get
that.
and then we'll make sure you guys get on your email.
Yes. Yes.
So of the two, from what I'm getting, using the your property, your office at home, for your taxes, is your probability of getting audited is higher because they actually trying to clamp down on a lot of people doing that compared to using the mileage or what
No. You can use the
Both.
mileage and the home base, not the either way.
Correct, but if you use a home, it's very risky because it might raise a red flag because it's very specific.
I'm going to butt in here. It's not risky if you're using your home for an office. What they're going to clamp down on is the guy that goes in the bathroom, writes and emails his boss. Now he's got an office at home. If you pretend I'm taking my home for an office, bring on the audit.
For
That's
this?
what I'm using.
88 and
You're fine.
Yeah, home offices.
But,
Not even
Yeah.
1%. That's the first time I'm hearing. 100% of my clients, they have on a 1099, I'm using it. And knock on the wood,
Well, and this is doing it the
For
right way, and that's why you're here this morning.
yes.
every agent in this office uses their home for an office because they don't have a desk, most of them don't.
Yeah.
So they do use their home.
Yes.
But if you do it honestly, like I get audited once a year, bring it on. I don't care, because I haven't done anything wrong. But if I using my little house here for an office, I'd be scared to death, because I don't even approve to have an office. But now that's fraud.
Yeah.
So let your conscience be your guide.
But it should be very reasonable because of the, for instance, if you have a 2,000 square feet and you say, okay, I'm using half of the house, 1,000, so absolutely that's a red flag.
That's right.
But I'm not going more than 10% usually. If somebody go only area that acceptable for IRS to use there as the 50% is daycare. When you have a daycare, yes, you're
Don't let
using
your
half
kid
of
use your
that.
computer, just say, stay off my computer, it's my office.
Yeah, and plus, if you look at your Schedule C, right here on the number 30, it's the 8829. If that was not something reasonable for IRS, would not put it in this form.
Right. A lot.
Even if you have just the one desk, that the one corner of your living room, it's the
Completely.
And the kids play games
20
on it.
square feet, still you're eligible to deduct it.
Yeah. Okay. Now,
Might be just 1%, not 10%,
right.
but does not have not even teeny tiny red flag. Because of the who's on a 1099 does not use the, because when you're 1099, that means you're self-employed. When you're self-employed, that means you're aggressive to get the client to have more income. You don't have a paycheck to go to work and go home and relax and put your feet up and I said, okay, tomorrow morning again I'm going to work. You have to 24 hours think about your business and how to get the more income, more clients. So absolutely, even you're thinking you're using your home-based business because you're thinking about your business.
Exactly.
Yeah.
I don't want clients in my house.
No, no, nobody of us doesn't want it. So I don't want to have a client in my house. But when I'm going home, constantly I'm thinking about, they called me at 10 o'clock to ask a question. They said, this word, why you're not telling that? I said, I'm self-employed. I have to respond to the business. Even you responding to that phone at home, you have a home-based
The
business.
home business.
Yeah.
How about thinking about business? Can I write that out?
So I'm staying here probably 5 feet or whatever I can use. So this is, yes, I'm gonna go ahead and do that. This is the how calculated, but I'm gonna say for me, you guys use my business and I do it for you. This is also a little bit chart again, just to explain that how you, which area you're eligible for home base, you're not eligible. Bottom line, everything is yes, yes, yes. You're eligible to use the home base business. This is very important because the home-based business has a two different way. If you look at your Form 88 29, it has a direct and indirect. Anything you're putting that's as an indirect expenses is not directly. Only way you can use the direct expenses that they improved the area of your home-based business. For instance, if you have a one room, you want to paint that room. That's direct expenses. You can use it as the other expenses or repair and maintenance. So this is very important and have
You
to
know why I
just
think this is so important this morning? If you have a client that is in business for themselves, they need to talk to somebody then can give them this information. We should not be doing that. We're not tax experts. But her giving us this information lets us know that she knows how to treat our clients if we send them to her. Because I think the home is a biggie anymore because a lot of people working out of their home.
Yeah,
We're
and
not
it's a
qualified
quite
to tell them
big,
we're qualified to
good
tell them
deduction.
where they can go. Exactly right.
It's a quite a good deduction. This part, already I explained it for that, and it's very good. The new law placed by IRS started, I think June, actually Washington DC, July 29. I have not used it yet, but that's very, very easy, and IRS is pushing instead to go through all of these forms and everything to use this new law. It's called the simplified option, and it's very, very easy. They give you allowance $5 for each square feet you're using your home, up to 300 square feet, and up to 1,500 deduction. Then you don't need to go through anything. So, but the whole point is you have to make sure how many square feet you're using your house. This is the new law. They're trying to push it. I just noticed on a 1040 also they put it there. If they're gonna push it through, it's gonna be very easy. Even this form is gonna go away. And then on a 1040 they can put that. How many square feet you're using? Your allowance is $5. Times by $5, maximum 300 square feet and maximum 1,500